Jim Paulson of Wells Capital Management, Peter Schiff, Euro Pacific Capital, and author of the Little Book of Bull Moves in Bear Markets, and CNBC contributor Jerry Boyer. All right, Peter Schiff, you heard those economic statistics. How do they inform you regarding the stock market?
Well, stock market again made a new low today. I've been talking about the stock market priced in gold. We're now down to just 7.8 ounces of gold and dropping fast. You talked about the import prices that were off a bit. I don't expect that to last. The central banks are creating a lot of inflation. That's what gold is showing you. And I don't think these prices are going to stay down for long. I think consumer prices are headed a lot higher.
But, Peter, you have been a big dollar bear for quite some time now. The dollar was very bad for a bunch of years. But in the past year, the dollar is doing extremely well. It's up, 25% or so.
Well, it's only doing well right now when you measure it against other fiat currencies that are also going down. I would argue that all currencies
fiat currencies. What are you talking about? They're all paper currencies.
So the dollar is losing purchasing power right now against gold. It's not losing purchasing power against the euro, but ultimately I think it will. I think the dollar is going to end up falling faster than a lot of these other currencies. Right now, people who are in Europe who are worried about the inflation that their central banks are creating are buying dollars. But again, they're jumping out of the frying pan into the fire on that one.
Jerry Boyer, you hear Peter Schiff on inflation and the dollar. It's interesting, just a statistic. Over the past, not quite a year, April 2008 was the dollar bottom. Since then, it's up 23%. Now, gold during that period has basically been flat. It's up 4%. However, Peter is, of course, correct. Gold has had a great rally. Year to date, while the greenback is up 8%, gold has had a tremendous rise of 35% and is now, of course, approaching $1,000 once again. What is your response to Peter Schiff's inflation outlook and investment play?
Well, too soon would be my immediate response. And there seems to be a detach between gold and dollar. It's not just a simple gold goes up, which means the dollar's weaker. And to be honest with you, Larry, I don't get the obsession with gold. Okay, the purchasing power of dollar in terms of gold has gone down.
Yeah.
The purchasing power of dollar in terms of cars has gone up dramatically. The purchasing power of dollars in terms of houses is the best it's ever been.
Gold is not an obsession.
I don't drive gold. I don't live in gold. So gold's not the only commodity I care about.
The obsession is with fiat currency. Why does that have any value? It's no intrinsic value whatsoever.
I don't know. Give me yours if you don't like it. I use it every day. I've got fiat currency sitting right here.
But it has no real value. Gold actually has a store of value. Gold is tangible.
It's something. I buy food with it every day. We buy cars with it. It doesn't have zero value.
How do you know what you could buy with it tomorrow? And the value falls every day. The government is running it off printing presses.
Let me get Jim Paulson in. Jim,
then give me yours. I'll take yours.
I'm using it to buy gold.
Time out. Jim Paulson, I got to hear from you because I know you're more optimistic. I want to ask you about the gold-dollar inflation debate. I want to ask you about today's economic statistics. But most of all, Jim, I want to ask you if you believe the stock market will withstand the late November bottom, and is this a buying opportunity?
I think so, Larry. Who knows? We're definitely challenging this low. I guess what I'm taking home or watching in this test of the low is comparison to the past time we were here. It seems a lot wimpier to me. The intensity of this test, in the sense that the volume, trading volume, is not escalated at all. Even on days when we've had big down days, trading volume is still pretty punk, which means there may be not a lot of buyers here, but there's not a lot of sellers either, like there was last November. Other markets continue to look pretty good to me, Larry. Spreads that have come in the bond market have stayed in. LIBOR spreads, swap spreads, investment grade and junk spreads have not re-spiked like they did when we tested this low in November.
We're spending too much time.
And then the commodity markets have stayed fairly flat as well. The non-energy commodity prices tonight, S&P Goldman Sachs non-energy price index is still 10% below.
I think we're giving people too much opportunity to buy this bottom, which means it's more likely not to be the bottom. And when you spend a lot of time testing a low, generally the low fails.
But let me ask you, Jim, you like the cyclical pro-growth sectors, the industrials, the machineries. I think you like energy. I'm not 100% sure. Now, they've been killed in this last downdraft. What's your take on that? Would you still go there? I mean, today, just to read off from the stock charts, transports were down, home builders got clocked, retailers down, commodity stocks flat, cyclicals, the Morgan Stanley Cyclicals Index down 1%, machinery down 1%, even construction, you know, infrastructure construction, that's down 2%, Jim. That's what I find the most disturbing part. Where do you make of it?
Well, I'm not buying those for today or tomorrow or this week or this month. I'm buying them, Larry, for what they may be doing, you know, towards the second half this year and over the next few years. You got to buy these things when nobody wants them, when the intensity on Main Street, which where the storm is at, is horrible today. Like you just listed off all those statistics on Main Street, they're all horrible. But what is good to me is the Wall Street statistics are looking better. A lot of them I just talked about are looking more stable in the last several months. Wall Street was on free fall in September and October, from commodity prices to bond spreads to stock prices. 3 or 4 months later, Main Street's now in free fall. But the fact that Wall Street's been stable now for 3 months or so might be saying the economy is going to bottom in the spring quarter. And if anyone smells a bottom in the economy in the spring, then these industrial stocks are going to take off.
All right.